Hey guys, Rajib here from Financial Hub India. In our last session, we have been talking about India Cement on a weekly time frame chart. So to start this session, let me just give you a brief idea on this, what we have been talking about here. In a weekly time frame, I see it's an uptrend going on here. Here we have this change of trend and there is a support level right over here. So we got a support zone right over here. Till the time this support zone is on and respected, I will be looking for buy signal, and so here we'll be looking for some buy signal to generate to trade in line with the overall uptrend. All right, and if we don't find anything over here and we see price falling below this level, not sustaining on this support, then we'll be assuming that the price is below the change of trend level now, and we will no longer be looking for buy signal in this, because if the change of trend level, which is this zone, is broken, we'll be expecting price to lose the upward momentum happening here, and in that case we'll be start looking for the sell signals, and this will be our target 1, target 2, and this will be our ultimate target areas. All right, so this was a quick summary of the weekly time frames, and if you want to see the brief analysis on the weekly time frame chart here, then please go back to the part 1, and part 1 is all about the weekly time frame in India Cement analysis here. And in part 1 we have explained the weekly chart in a brief way. So now let's go down to the daily time frame here. So in a daily time frame, the current market is right here, and again it's on the support level. We have a key support level right over here. We have one turning point, second turning point, it creates a key support level. The blue lines you see are the weekly key level lines, and the red lines you see, these are the daily key level lines, right? So near to the daily key level lines, we can see a weekly key level line over here. So overall, again, we can consider this one as our support zone, and price is right now on the support zone. Now if you see the daily time frame chart here, we are moving in a flat market condition here. All right, so now in that case we can say that the current market is trading at the bottom of the range. And in terms of a flat market, what do we do? In terms of a flat market, we want to trade the tops and the bottoms, right? So we want to buy on the bottoms and sell on the tops. All right, again on short on the tops and buy back on the bottoms. That's how we trade. So with this theory of flat market structure, we can again look for some buy signal over here, and the target will be right over here. All right, and so far we don't see anything here. So that's one thought on this chart. Now in case we don't find any buy signal over here and price starts falling below this support zone, then yeah, definitely we can look for sell signal from here onwards towards downside. And that was the same plan what we talked in weekly time frame chart. Now on a weekly time frame chart, we had the first target as in here, but in the daily time frame we have a key level coming up right over here, and it's not that old. Generally the recent key level has more priority than the older key levels. So I will be considering this key level of support more seriously than these support areas from the weekly. So once we see the price is falling below this support zone, in that case I'll have to keep an eye on this 154 level of daily support, and I need to see what the price is really doing over there. And if I see price is holding this level and showing some reversal signal, then I'll have to react on this level here. And then if the price comes down to this level, then again we'll have to look at the price action story over there. And again, same will happen here, same will happen here. If you're just seeing weekly time frame and you're ignoring daily time frame, in the weekly time frame we don't see the level of 154 much clearly, even though it looks like it gives you some hints over here, right? But in the daily time frame, the data is much more clear than the weekly. So chances are, if you're not analyzing the market with a drop-down manner, like once you're in weekly, then if you're not checking out the daily time frames, then there is a chance that you will be missing this kind of key levels, and this will put a risk in your trade. All right, and again, all these levels here could be used for breakouts, for taking the continuation breakouts entry. In case the price just keep on falling, breaking these levels, then we can use these levels as a pullback and re-entry levels. whatever data you can have in the current market, the key levels you can have in the current market will have more priority than the older data. So this is an important point to make. On the chart, we draw different types of key levels, but there are some key levels where we prefer to have an entry, but all the key levels doesn't play the same role. So out of all those key levels, in some key levels, we prefer to have our entry setups. And those key levels are preferably the current market, the recent market key levels. And there are some other key levels which are drawn from the older data, since those levels are respected and not yet broken. All right. So in those levels, we watch the price action happenings, and generally we use those levels to exit our trade and not for a fresh entry. So as an example here, this red line, which is a current market key level here, should be used as your entry levels. Let's say price falls below this one, and then on a pullback, you want to have an entry over here. Or maybe you got some breakout structure over here, and then a breakout you may catch. You are using this key level for entering a new trade. All right. And at the same time, I mean, if you are short right here, and then we see some reversal signal here, we will obviously exit on this level. If you already have a running trade and you get some reversal signal on these key levels, you will be exiting obviously. But to open a new trade, we prefer to open it from the current market key levels rather than using the older key levels over here. So as I was talking about these three key levels, so these key levels I'll prefer to enter new trades, and these key levels I'll prefer to watch out the market, what's happening over here, and if I see some reversals, I'll be exiting from here, and I would not prefer to open some new trades on these key levels. I hope I made the point clear here. And just to do the backtesting that how this concept really works, you can always test this. You can always test this concept on the chart you have, where you can see that what's really happening, what is the accuracy of the result when you take the current key levels to have your fresh entries, and older key levels to have your fresh entries. So in my experience, I have found more better results when I can follow the current market key levels or the recent times market key levels, rather than key levels coming out from 2 years back or 3 years back, or maybe 1 year back. Now, to understand what is the current market key levels and the older market key levels, so again, those are different pictures. Those are again some detailed concepts in this topic. So which is covered in the course itself, Financial Hub course. So far we have completed our weekly analysis, and on a weekly we have seen the prices on the support level, and there is no buying signal yet. And then we have done the daily time frame analysis, and the daily time frame is talking the same thing. All right. Okay. One more thing in the daily time frame analysis, I just wanna mention. In daily time frames, right now, if you see, the price is really going flat on the key support level here, isn't it? So look at the difference. Actually, the price comes back here and it shoots up. Doesn't take time. Again, it comes back down here, it shoots up. Doesn't take time. So it doesn't hold on the level of support level, right? And while falling, the same thing happened. It went up and fall immediately. It went up and fall immediately. So in short, you can see some V shapes going on either side. And that's what reversal is. And that's how we want to see the reversals. And when you see the price is stuck to the key level, stuck means it goes flat and not moving really either way. So that's one of the signal, that is one of the hint for you that the reversal is not really happening over there. Right? Does it make sense? So like what happened here, 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 and here is not really happening here, isn't it? Price came back down here. Now it's day 1, day 2, day 3, day 4, day 5, day 6. It's been 6 days. We are just holding the level. We are sitting on the level. That was not the case in here, or in here, or in here, or in here. We have already seen this kind of scenario in the weekly time frame. In the weekly time frame, price went up, came back down, goes up. Again, you can see the V shapes. Doesn't take much time. It falls back here, and the same thing was happening here. This was really flat. So basically, you have a range over here, which is the daily range we have been talking about. right? In daily, you see it much clearly. All right. So when this kind of range happens on a key level, that's a bit tricky to trade, because now the hands can be either side, towards up or down. And any kind of reversal formations you look in there, most probably you are going to stuck yourself. All right, because what do you mean by the reversal formations? And let's say the most popular reversal formation is the spin bar or the hammer, you say. What if I give you a pin bar right over here? Let's say we formed a pin bar here, right? Like you got it here, you got it here, you have it here. But again, the pin bar has its own criteria, its conditions. It's not like you see a pin bar and you go into it. It's not going to happen that way. That way you're not going to make money. So there are a lot of conditions and criteria attached to with this pin bar, how it forms, where it forms, and what is the background behind it, all those things. So I'm just talking in general in here. So out of all those criteria, I'll just give you one example, that when it really doesn't work out, and someone who is just following this formation and he is just sitting on the chart and waiting for this formation, and the moment he sees this formation, he goes into the trade. So that's the 100% wrong way to trade the market, because this one candle doesn't define the market. Market is defined by this overall price action structure happening behind it, happening with it, what's happening in the impulse move, what's happening in the corrective move. All those things you need to watch out. I'll just give you one example, that why it is important that you just don't see the pin bar and you need to see the overall price action context. Whether the overall price action context matches with the pin bar, then only you go ahead with the trade. So it comes in here, if I give you a pin bar here, is there any difference between a pin bar formed in here and a pin bar formed in here? So the difference is this pin bar, or maybe you can say in the opposite side, pin bar formed in here. So the difference is here, the pin bar is not a part of a flat market condition, but here this pin bar is a part of a flat market condition. See what's really happening here. Price coming back down, up, and again down. From down it just went up. So one of the criteria, a pin bar should not be a part of the flat market condition. A pin bar should be a part of the reversal condition, which is here. It goes up and you don't see any flat market. It goes up, goes up, goes up, and it goes up right over here, and then the buyers couldn't handle the gains like it handled in here, and this time it has fallen, which shows the weakness of the buyers and which shows the overpowering of the sellers. All right. So from the buyers, the control has moved to the sellers over here now. The sellers have pushed the buyers towards downside, and sellers took the control here. And in short, whenever you see at least a V shape with a pin bar, V shape momentum, V shape price action context, it goes up, goes up, goes up, goes up. You got a pin bar, and then it is like this. It goes down, 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 down. You got a pin bar, and it starts moving up like this. You know, the pin bar candle should form in a reversal mode. It should not form in a flat market conditional mode, like in here. Because if I give you a flat market here, price goes up here, price comes down here, price goes up here, so it's already flat market going in. Now if I give you a pin bar here, so it doesn't define a reversal. What it defines is that okay, the price action context was from the top, it was coming to the bottom, from bottom it was going to the top, and again what happens with the shape of the pin bar, price has just fallen from the top to the bottom. That's it. How can it really communicate as a reversal formations? All right. So in this case, if we get a pin bar here, or there are some other formations too in terms of reversals. So no matter what reversal formations we get here, we will not be considered this one as a reversal trade in this. So what should be the trading strategy here? That we'll talk about. Guys, since I was talking about this concept, just do one more thing. In these candlestick formations, don't just try to see what the formation is. Don't just memorize the formation theoretically. Try to understand and learn the formations with its logic. And the same principle is applied for trading chart patterns too. All right, in chart patterns, don't just go for, okay, this is a shoulder, this is a head, and this is a shoulder, that's it. let's go for a trade. No, don't just memorize the theory and trade it. You try to understand why this shoulder forms, why this head forms, why this shoulder forms. Because if you just learn this pattern with a particular shape, it won't be coming in front of you with a particular shape all the time. It will have 10 different faces, but you won't be able to recognize that phase and trade those patterns since you didn't understand the logic behind it, how it forms, why it forms, where it should form, what is the significance of those formations, what is the communication behind it, what the chart patterns or the candle patterns is trying to communicate with me, you know. And if you miss those logics, those communications with your candle patterns, with your chart patterns, then you're not really doing price actions. I have trained a lot of traders, experienced, beginners, all right, and I have seen the experienced traders in price actions. They are saying, so this is, you know, we can't trade this one, we can't go for a buy on this pin. See, this is a buying pin. When you see this in line with the overall price actions, you should buy it. You should go for a buy trade. And the traders say, sir, we can't buy this one because this is not a right pin. Why? The reason they say, it has a black body here. Since it has a black body, the closing is below the opening, we can't consider it anymore a buying candle. And that is surprising. That shows that you've never understood what is a pin, what is a hammer, what is the logic behind it. See, if something goes down for 100 points, then it moves up for 80 points. Does it matter where it opened and where it closed? It doesn't matter for me. For me, what matters is that whatever fall has happened, it has covered 80% of the fall it faced. That's it. That shows me a good reversal. Now, if it had a black closing or green closing, I don't care. It doesn't matter. Ultimately, in a pin bar, what are you looking for? A reversal formations, right? Why it's a reversal formation? It falls drastically and then it pulls back up. It pushes back up, which shows the strength of the reversal, which shows the strength of the opposite party. So here, if the sellers are powerful, the sellers are overtaken by the buyers here now. Now the buyers are in control, which creates a reversal formations. So it doesn't matter that where is the shadow here, where is the closing here, doesn't matter. When this logic is satisfied, hopefully you're getting me, all right? So I think today again we involved ourselves in some other talks, and I'm running out of time again, like yesterday. So anyways, our daily time frame analysis is over here. Now what is left is we'll dive down to the hourly time frame, and we'll talk about the hourly time frame analysis. And there we have the trading opportunities. So see, all these sessions I don't plan beforehand that what to talk in these sessions. I just take the chart and I feel like, okay, there are some general topics to talk about, but in those general topics some other topics comes in related to those trading topics. So I'm running out of time today again, and hopefully I'll be covering the 60-minute time frame chart tomorrow. I would request you to subscribe the channel here so that you can get the video updates whenever I upload one. And I'll see you on the part 3 in the 60-minute time frame analysis. All right. Thank you so much for your time here.